our aim is socio-economic empowerment. We try so much to reach the person at the bottom end of the pyramid. So even talking of all the way from savings to debt management to budgeting and all this, the person at the bottom part of the pyramid has very little to save. They have very little to budget. They have very little to manage. So sometimes, as we say, there's a silent, let me call it a slogan to savings that says you can do it, but some people don't know. I'm saying silent because for people who are not informed about all these savings, budgeting, and debt management, they'll say they cannot manage that because the funds they earn, the money they earn is too little. But for someone who is informed, knows very well that any amount you have, you can save and you can budget. So going back to your question about the lending part, for microfinances, for example, now for Caritas was licensed to be a bank in 2010 and is regulated by CBK under the Microfinance Act. But before that, there was 30 years that Caritas was in operation. It was in operation in group. Someone somewhere saw it better to start a group for savings and lending. That is savings and borrowing. So when they started the group, they started with Mama Mbogas all down at the bottom of the pyramid. They saved, and then they were borrowing. So the demand grew. The demand grew so big that the bank was forced now to move from being a group now to a microfinance bank. I think that is just a clear reason to how you can save and borrow as little, and the amount of money you borrow can also still change your life, because for groups, they save a little, then after some time they borrow mostly to improve their businesses. Some of them borrow even to improve their lives. Some of them build homes. Some of them and if you see the amount that has been achieved by that saving, that 20 shillings is huge. Why? Because some of them, they don't shy away from debt, as we always say, that debts are expensive, debts are all this, but if you understand your purpose and what you want to achieve, you understand the interest rates that are involved in the money you have you have borrowed. I think for saving, for borrowing, it is a life changer, it is a game changer, because if you understand what you want to do, you can go far. So for Caritas, we operate from the markets that are the unbanked customers. We bring them to banked, and then from the lending side, they borrow to improve their lives. Yeah.
Thank you, Angela. Thank you so much, Angela. So as Brother Geoffrey picks up the microphone, I'd like to see, or hear rather, for the team and the rest of the viewers as well who are watching you across, just to find out from your perspective, what are those red flags you'd mention to your clients? Because I believe that for you to have been in business this long and for the successful performance we saw the other day, it means that you're soundly advising your customers. So I'd like to hear from you, what are the red flags probably? I know there's what you look at as a financial institution, but going beyond the transaction, because I believe most of us on this panel here, we go for relational business as opposed to transactional business, which is a touch and go. So what are those red flags probably you'd like to mention to the panel, to the viewers rather, and the attendees here, to be careful about and look at before they go into debt?
Thank you very much. The question about debt, it's a question that is really debatable. But I know a lot of businesses, including corporations, thrive on debt. It will only depend on how you want to mix the capitation of your business. But in most businesses, you'll get that debt is among the capital that businesses have used. So debt is not but per se, it will depend on how you have invested and how you have planned your business. For example, when you've started your business, the most advisable way is to start with your own equity. And you realize that if you come to most banks and you want to sell an idea, you tell the bank this is what you want to do. It's rare that you will be able to get capital from any bank, by just having an idea, unless it's a foundation, it's a support that the bank is giving. So if you're able to start, you have an idea, a very good idea, you start something yourself, and then however small it is, you come to the bank, then we can be able to support you on that. So that is not bad. It's only depend on how you want to structure your business and how you want it to appear. Because at the end of the day, there are risks. But again, if you are calculated enough, you can be able to make some good money. Like now, for example, what do I say about, we have people who borrow for consumption. Yeah? You borrow for consumption. If for example, you are employed and you come to borrow, that's something that as a bank, we cannot be able to encourage. Because at the end of the day, you borrow, for consumption, but where do you get the money to pay? It's going to come from your pay, so it's going to strain you. So if you're able to borrow and invest and get a return, this return can be able to assist you repay your loan. I can give an example of KMRC, for example, the affordable housing. We have had, if for example you come and borrow, the houses that the government has constructed, they are really subsidized. You get, for example, you are earning 50,000, and then we take something like 25,000. But once you get that house, you get a rent of 35,000. So it means you have a property, you're making money, you are making money out of it. You've borrowed, but it's getting you a return. The return is assisting you to repay the loan. So that, it depends on how you really want to look at it. But we have had times, there were times when things were bad in this country, where interest were even at 30%. But some of the people who borrowed that time, they're now big corporates. So it's not something that you can really say, I want to run away from. But the ideal situation is what we have seen in most places. Those businesses that thrive very well, they start from the owner's equity. You start with your own equity, you do your savings, you start a business, and then thereafter, if you want to do the expansion, now you can come to the bank so that we can be able to lend you to expand your business.
Thank you, Bwana Geoffrey. I think it's interesting that the common theme we keep hearing is income, saving, investment. And so just with that in mind, and we transition to you, Philip, looking at that conversation, it becomes very interesting because in the Kenyan ecosystem, we have the buying of land and parking it. And then now, of course, as has been mentioned by Geoffrey here, we have the conversation around probably affordable housing and also the transition from being a renter to being a homeowner. So I'd like to just bring all that together in terms of the opportunities that lie in that ecosystem, the benefits that lie in that ecosystem, especially when you're transitioning from a renter to an owner, and also the conversations probably you're having with your clients when it comes to either owning and renting it out, like Geoffrey has just mentioned, so that it becomes an investment, it becomes an asset, rather than a liability that's taking money out of your pocket. Thank you.
Thank you, Geoffrey. Philip Omondi is my name. I take care of business development at our property finance department. But before I respond to that question, you have your calculators on your phone. Just pull it out, and just to do some quick math. You're there with me? You ready? Okay, take your shoe size. If it's 8, just write 8. Not 42, 43, no. If it's 8, write 8. If it's 7, write 7. Alright, then add 2 zeros. Minus your year of birth. So if you're born 84 like myself, so if I'm a shoe size 8, so it's 8, then I add 2 zeros, I minus my year of birth, which is 1984. To give you a negative, right? Mm-hmm. Then add 2024. What does it give you? It gives you a 3-digit figure, right? Which should be your current shoe size, if it's an 8 or a 7, and your current age, or the age you're turning next, right?
Interesting, yeah.
It's all about mindsets, is it?
It is.
So since we are talking about investment, and Ray has asked a question around purchase of land and transitioning to being a homeowner, and since with the dispensation of affordable housing, the government is pushing the affordable housing agenda, and you've noticed there are quite a number of projects that are coming up. And at NCBA, when you walk to my desk, the first thing I ask you to do is, why don't we first of all understand what the offering is all about? Because everybody is talking about affordable housing. If you hear about affordable housing, the first thing that comes to your mind is the government social housing project, which is not the case. Yeah, there are quite a number of projects. I think just the other day I heard there are about 20 projects that will be launched in the next coming 2 weeks with the formation of Affordable Housing Authority. So they are championing that, and the units in question are as low as what? If you go for a bed sitter, you're looking at something in the range of between 2.5, on the upwards, maybe 3.54 million. So the next thing you need to then ask yourself, if I'm buying this unit for investment, what is the total cost of this property? What is the total rent I'm expected to receive from this property over a period of 12 months? So if you anticipate to receive 12,000 every month, times 12, that's 144. All you need to do is divide that with the property cost times 100. It will give you your, what we normally call your banking ROI. And for the investment specialists, they will say return on investment, and I think David has really touched on that quite a bit. So if your return on investment is below the current inflation rate, then what channel? Are you together? You take the rent, multiply by 12, divide by the property cost, the property cost, the annual rent. So take the annual rent, divide by the property cost. So provided the times 100. So provided the amount you arrive at, the percentage you arrive at, is lower than the current inflation rate, then that's not a viable investment. All right. Secondly, the next thing we do is to help you to look for a property. So beyond the government social housing projects, we have properties. We partner with developers who are putting up units for sale. So what we do is we go to these developers, we make a mission to them that we want to finance the objectors. So the key thing for the bank is to ensure that we are giving you an opportunity to reduce the time you go out there to look for a property. So today, you earning a salary, let's say for argument's sake, between, I was doing the simulation when I was sitting there, a salary of between 180 to 270,000. That typically would be give you the ability to pay rent of about 60,000. If you transition that to a mortgage facility, another can receive rates of 9.5. I think the average right now is about 9.5. For NCBA, we offer 2 rates. It's 9.5 for 20 years or 9.9 for 25. So with a salary of between 180 to 270, you're looking at a mortgage facility of between 5.3 and 8.4, and your monthly installments will be somewhere in the region of between 48 to If you have a salary of between 60 to 180, typically this should translate to a mortgage facility of about 1.8 to 5.6, giving you a monthly installment of about 70 to 52,000 every month. And if you're earning between 30 to 60,000, that should give you a mortgage facility of about 1 million. So the monthly installment will translate to about 9K every month. 1 million should give you a bed sitter, but how does it work? Again, the notion that most customers who walk to my desk have is you can actually connect your rental payment, you can match your rent, the rent you are getting from the property, to the monthly installments of the mortgage. In some cases, yes, you'll be lucky, but in most cases, actually 80% of the time, you realize that the rent you're collecting from the property is less than how much you're paying on your mortgage facility. But is it still an investment? Is it? The net effect is you're reducing your commitment you're making to that installment that you're putting towards that mortgage repayment. And today, if you decide, I want to convert my rent into a mortgage facility, the first thing I'll ask you to do is just repurpose your rent and work backwards. If you're paying rent of about 50,000 every month, that can give you a facility in the range of 6.5, if I'm not wrong. For 20 years at 9.5, the repayment should come to around 61,000. So all you're doing is, with your rent of 50,000, you're basically adding just 11,000 on top. But are you a homeowner? So your options are two. It's either you rent it out at 50, add 11, or own the place and add 11. I mean, own the place and you'll still be required to add about 11,000. Today, my final remarks, Ray, if you take a mortgage facility, the notion out there is a mortgage is a risky affair, right? That if you take a mortgage facility, the first thing the bank will do when you default is what? Auction. But back in the day, do you know what used to happen is auction would only come when, and we'd only auction the property to recover how much you owe the bank. So if today you took a facility of 6 million 10 years ago, has the property appreciated in value over time? It's probably at what? Maybe give an average of 8% per year. The property probably is valued at maybe 10, 11 million over a period of time. So if you only owe $1 million shillings, the bank will only sell the house to recover their $1 million plus any other incidental cost like auctioneer fees and all that, yeah? So then now, today, with the Consumer Protection Act, which I think came into effect in 2013, a bank cannot auction your property for less than 70 to 80% of its current market value. So even if your income disappears, for lack of a better word, and you're not able to make monthly installments, you have two options. Either enter into a private treaty with the bank. By private treaty, I basically mean you sell the property at your own terms. Go out there, look for an agent, sell the property, pay the bank, and walk away. But the net effect is the bank doesn't want a situation where you're given a loan and the first thing we think of is to auction, all right? Today, if you take a 6.5 million facility over a period of 20 years, you realize you'll pay back 13 or you double because of interest. Just like what, I don't know whether it's David that mentioned, that the interest you'll pay is more than the amount you borrowed, right?
Correct.
One boy, right? When you're going to high school, how much how much was your pocket money, if I may ask? Yes. It was not there. 100 shillings? No, let me 200. That's okay. Let me speak to the guys like me. Anybody who used to be given 1,000 shillings to cater for everything, transport, pocket money, right? We all lived in that regime, right?
You did well.
1,000 shillings, right? Today, if you give a Form 1 student 1,000 shillings, how much can they work out with from a supermarket? Sukari na shoe polish, right? So what has happened to that 1,000 shillings over time? It has lost value, right? But the key thing is, when you buy a property, what happens to your property over time? It appreciates in value. So your capital gain in that property over a period of time that's your gain. That is what your investment on that particular property. Then the beauty is, and this is the last comment, Ray, the beauty is you can take a 20-year loan and repay it in 3 years if you want to. There's no way NCBA will ask you to pay the interest you're foregoing for the next 17 years. Are we together? So you take a 6.5 million loan today, you want to pay it in 3 years, all you need to do is accelerate your repayment. So if your monthly installment is 65,000 every month, if you can make 100, the excess 25 you're making on top is going towards reducing the principal. And before you know it, you'll have reduced the period of your facility. Thank you.
Thank you. Thank you so much, Philip. And I think from the crowds, it seems that 1,000, Bob, you are doing very well. So allow us to transition based on some aspects you've touched on, I think, around inflation, around devaluation as well. And just going into, like I mentioned before, Fred, this is to you. The elephant in the room is the tax conversation across our country. And it's really a global conversation as well. We're seeing it in the UK, we're seeing it down in the US as well. So these conversations are not new to the world, neither are they new to Kenya. But I think what I'd like you to mostly focus on are what are some of those most overlooked tax incentives that both individuals and businesses could leverage upon to boost their savings, and probably then turn that savings into an investment and build up on those multiple income streams, as have been mentioned before.
All right, thank you for that. Good afternoon, everyone.
Good afternoon.
Maybe before I begin, by show of hands, how many of you have never interacted with KRA, sorry?
Directly?
Who has never?
One-on-one?
Yeah?
One-on-one? One-on-one interaction with KRA?
Yeah, one-on-one interaction with KRA. Who has never had an interaction? By show of hands?
Had an interaction, eh?
Okay. Who do not have a PIN? All right, so I can see from the audience, everyone has interacted with KRA. So that means that nowadays I hear people say that knowing tax is going out to be a new life skill for every Kenyans. Because year in, year out, we normally have tax increases that normally affects everyone as an individual or either as a business. For an individual, I'm talking basically of employees, the salaried ones, or those ones who are working as a sole proprietor. Because those ones now are carried, looks at them as an individual. The other aspect is if you are working using a vehicle. By saying using a vehicle is either you are doing business as a company or you are doing it as a partnership, as we have seen this new trend coming up. So by virtue of you earning any income from Kenya, remember the government is a silent shareholder to everyone. If you are a salaried employee, the government wants taxes from you. If you are a business, yeah, you'll say the government is not on my CR12, but at the end of the day, they want that 30% from you. Yeah, so I think now people are woke, and we have seen how the government tries to raise revenue. And basically picking up from what the rest of the panelists have said, yes, remember the government being a silent investor or a shareholder, even the government wants their dividends at the end of you earning income out of it. I mean, every investor would like to be getting their dividends by virtue of them investing in everything. So, by government now looking at businesses, so once you have created your investment, you have grown, now the next thing is how well educated are you when it comes to understanding your expectations from the government. Do you know what is required of you? Do you know of the timelines? Do you know of the tax rates? Do you know of the expenses that are allowable when it comes to your computation of your taxable profit that will be subjected to tax? And if you are aware of it, do you make the right declarations? Are you understating or are you overstating either your revenue or your expenses? Because basically that's what the government would like to establish. Are you doing the right declarations, or you are not doing your right declarations? Because as much as you go ahead and declare your returns and file your subsequent tax that is due to the government, remember the law always gives power to the commissioner or KRA to always come and conduct a verification review, just to ensure that whatever you declared for your tax purposes was the right declaration. So basically what they will be trying to establish is, did you declare the right income, and did you also claim the right expenses? So that's the basics of where now everything starts. Now going forward, when it comes to tax savings, are you aware of the available incentives that are there to you, either as an individual or to a company or a business? When it comes to an individual, we normally have what we call them tax reliefs. So for these tax reliefs, these are reliefs that are given to every employee, basically on the income that they have already earned. So what these reliefs does is that once you compute your taxes, this relief now will determine what your take-home will be. And for these reliefs, we normally have the personal reliefs, which is at 28,800 a year. We have, for those who have insurance covers, you also get a relief, which is at 15% of your premiums, capped at 60,000 in a year. For those who have, the insurance relief also applies to post, this is something which they came up by the Finance Act 23, which basically they call it post-retirement medical fund. That also applies to what applies to insurance relief. So that is also going to increase your take-home. The other one is affordable housing. I've heard people, my fellow panelists here, talking of affordable housing. And we all know, for my salaried friends, I'm sure when you check your pay slips, nowadays people are very concerned with their pay slips. You would like to know how to establish what are your deductions. So even for those who are being deducted affordable housing, yes, there is a relief for that, which is capped at 108,000 a year, or 9% of your contributions the whole year. So those are the reliefs that are available towards now the employee, or those ones who are working as sole proprietor. And maybe just to expound more on the sole proprietorship. Remember, sole proprietorship is as much as you're trading as a business name, you can't really distinguish between the two. That is between the business name and the sole proprietor or the owner. Because ideally, you all work under the same KRA PIN, which now will basically fall under your individual PIN. So at the end of the year, once you close down your year, you come and assess what revenue or your performance of this business that you have already registered, then you'll bring it into your PIN. And if you have also employment income, you also come and add it to your PIN, but separately. You account it for it separately. But for the businesses now going into partnership and the company, the treatment is almost similar. It's only that the difference when it comes to partnership, the end of year tax now will be accounted for by the respective partners in according to the profit sharing ratio. But in terms of computing your profits for the year, it's similar to what will also apply to the company. And basically here you'll be looking at, have you made the right declaration on your revenue, and for these expenses, were these expenses overstated or understated? And how many of you have heard of e-teams? Yeah, so e-teams is another thing that the government would like to fully incorporate. Remember, they are trying to block all avenues that they are going to lose revenue. So e-teams is a system that helps the government to, for them, or it will be basically uploading information on real time into their database, so they can have an overview of your expected income and also your expected expenses, so that you don't come and overstate your expenses. And basically with these e-teams, remember e-teams now cuts across everyone, regardless of whether you are VAT or non-VAT registered. What KRA wants to do with e-teams is that going forward, if your expenses are not supported by an e-teams invoice, then these expenses will be disallowed against your taxable income. So always ensure that whenever you trade as a business, always make sure, one is that these invoices that you are being given by your suppliers, you make sure that those invoices are e-teams compliant invoices. Otherwise, when the governments come to conduct their verification exercise and they establish that you claim this cost, but the same cost cannot be supported by an e-teams compliant invoice, then that will be disallowed, and they will come and assess tax on those such kind of expenses. The next thing that we should be aware of, I think the program was there and they're trying to bring it again, the tax amnesty. Maybe what I would like to point out is that, remember the Finance Act 23 came and repealed, or maybe it removed the provision that allowed taxpayers to come and claim waiver. By mean waiver is you settle the principal or the tax that is due, then the government will forego what we normally call penalties and interest. So the Finance Act 23 came and removed that. But then once they removed it, they came and gave a window to taxpayer to take advantage of what we call tax amnesty. With this bill that is currently ongoing, we have the amnesty in play with the proposals that are ongoing. If should it pass and you have liability, or maybe you missed out on the last program, I kindly request you to please take that opportunity, because once the amnesty program goes away, then going forward, what will become payable of you is both the principal tax, which is rightfully payable to KRA, and then on top of that, there will be penalties and interest, which now will come and bring cash flow difficulties now to businesses, because those ones will come and affect them more. The other one is about like basically understanding what is expected. You know, there are various aspects of government or of taxes which are levied by the government. So if you decide, let's say you are a business, I hear people here debating either to go the turnover tax way or the corporate tax way. People also here know that corporate tax is 30%, so they assume 30% is always high compared to the 3% of the turnover, which is done on a monthly basis. And maybe what we normally advise, you see, when you look at the difference between the two, for turnover, basically this one was brought in to target the small businesses whom their expenses are not high, because for turnover, it normally targets your gross revenue. So you don't come and factor in your expenses at the end of the month, like what is being done to the corporate tax at the end of the year. The 30%, you normally take all your revenue for the year, then you come and claim your expenses, then the balance of the profit that you are getting out of it is not what you give the government, the 30%. But for the turnover, this one it came in to help these small businesses in terms of complying with these other ones, just to make sure that whatever they are making as a sale, you pay it to KRA, and that's it, that's the end of it, because final tax, turnover is a final tax. But for businesses which has huge expenses or maybe cost of doing sales, remember, this 3% does not factor your expenses. So if it doesn't factor in your expenses, then that means that if you're trying to establish the margins that businesses get, then you give the government 3%. At the end of the month or at the end of the year, we'll find out that these tax has eaten into your margin. So at the end of the day, you're not basically making large turnouts or large margin or profits as you assumed you would if you continue with that way. So basically, with taxes, you normally have to like understand how this is being administered, what avenues are there for you now to be able to enjoy these incentives. Oh, and by the way, for VAT, if you happen to maybe incur VAT before registration, what I mean is that before maybe you hit that threshold, because ideally you are required to register for VAT once your turnover during the year exceeds 5 million. So before now you exceeded the 5 million and you happen to register for VAT, remember you had incurred an extra cost for you as a business, because whatever is being charged to you add an additional 16% of VAT. What maybe many taxpayers don't know is, remember there's an avenue that you can always reach out to KRA if you had already incurred VAT and by then you are not registered. So once you register for KRA, you can always follow up with them, and within 2 years prior or 24 months prior registration, you had incurred any VAT or any inputs, you can always go to them, make that application, so that now you bring it into a VAT return. And the good thing with that is that once they accept your application and you are able to bring in that input VAT that you are already incurred, that one will put you in an advantage position, since now you have credits. If let's say your business had not yet picked up, you can always bring in that credit that you know will be utilized in your subsequent filings, so that now you can be able to reduce the VAT liability until now you become in a payable position. So yeah, tax is very broad. Of course, we cannot be able to discuss everything at this time, but I'll try as much as possible to answer all your questions, and so that now we can have this conversation going on and sharpen this new life skill.
Indeed, thank you. Thank you for that. So, ladies and gentlemen of the panel, just allow me at this point to pick up a couple of questions from the floor so that we can see where we are at. I know we've said a lot, it's been quite a bit, and Terry, over to you as we pick a couple of questions from the floor. I think I take about 5 or so as we run through. Thank you.
Good afternoon.
Good afternoon.
My name is Kevin Ambugo, and my questions are directed to Mr. James Orero. And first, I'd like to ask about, as we are trying to diversify our investments, as we look into stocks, given that it will be inappropriate for us not to look at what is happening in the West with President Trump getting into office and stocks hitting skyrocketing prices. What would you advise to those who are already in the stocks? Should they sell or hold? And for those who want to venture into stocks, how would you advise them to penetrate into the market? The second question will be, with central banks reducing their rates, how can an individual or a business pounce on the advantages of this? Thank you.
Thank you.
Maybe you can take a couple more as you note them
please.
down. Any other questions?
Okay, so there was a hand. There we go. Yeah, there you go. Thank you.
Thank you. My name is Eric. My question is on tax. If you're, say, a sole proprietorship and some of the clients that you're working with, you encounter a situation where there's a roadblock that they would require you to be VAT registered, and you're not, and you've just mentioned here about like if you act for VAT when your revenue is not 5 million, you're increasing your cost. How would you go about it?
All right, thank you. One more, or we can start with the 3. All right, thank you. Very good one, James.
Thanks for your question. So I'll start with the first one. So we all know President Trump is coming back. And he has been really vocal on a number of areas that he believes should be able to drive his agenda. He talks about America first, but that goes for every single country and every single government that comes into power. You want what works for your people. Now, what are some of the things that is talked about that in any way would have impact your investment if you're investing across the board? One is from a tax perspective, which is more or less saying goods that are coming from the rest of the world, you will be able to put tariffs on that. They did this when it came to power in 2017 by around 2018, about 10 to 20% depending on which particular area. Now that would drive up the cost for the final consumer in the US, but also did reduce production mainly in China. Now that has an impact from a Chinese economic perspective. But the Chinese are aware of this, and if you look at what most Chinese companies have done, is being able to put production in the rest of the world. They just opened a new port in Peru that will be able to use to supply goods generated out of Southern America. A number of Chinese companies have opened up shop in Vietnam to supply the rest of the world and making it easy for them to continue doing business. Now, what does this mean for you as an investor? It's very critical that you diversify your portfolio. You're a Kenyan investor, you earn your income out of Kenya, you have the Kenya base, but also there is an opportunity for you to invest in the rest of the world on the areas that grows drive the growth. For example, everybody is talking about technology. When Trump won, you should have seen how Elon Musk was happy and the rest of stocks that are in the telecommunication world. Now, how do you get advantage of that? In some institutions like ours in Standard Chartered Bank, we give you an opportunity to partake into that. And it's not a lot of money. From $100, you can be able to invest in some of these companies that drive growth, so that on the positives on what happens with the Trump coming to power, because there are areas that will grow, you can be able to start with that investment. So when you're getting out of Kenya, you're also investing in the rest of the world, because we are connected more than before. On the second question on that the rates coming off. So across the board, most of the central banks starting to reduce interest rates. This did increase to more or less tame inflation. Now, in our market, in the October print, inflation was what? 2.7% from the high of 9 thereabout. And we have seen that first the central bank did lower the reference rate, the CPI to 12%. They were sitting next month is expected, they will continue to lower. But what has been more pronounced now is the rate at which the treasury rates are coming off. So the 91-day that most of us will invest has come down to around 12%. If we continue to that level, will be around 10% thereabout. Now, most banks have been giving really high rates most part of this year from last year. Fixed deposits around 15-16%. How do you think that will impact you going forward? They will be lower, 6-7% getting into next year. Now, where you make the decision to still be able to get returns above what the reference rate will be next year, now needs to more or less lengthen the profile of the investment that you take. From a fixed deposit, you can now buy into a little bit of longer dated government bonds that will give you returns above what you're getting now. Cash, original cash, which are the money market funds, have been really valuable now. But going forward, the returns will come off as the rates become achieved. So you have to lengthen the profile. But as you do this, what's really important is to speak to a professional, to really guide you, as I said in the standards, based on why you're investing, why you're looking to invest, what are some of those goals that you're looking to meet, so that you can align your investment to the products that are available to meet your needs.
Thank you. Fred, I think you'll pick the second question around taxes.
So just to answer my good friend on the question on VAT, remember how VAT works is first, if you are registered for VAT, then whatever cost that comes with you purchasing or acquiring any goods or services, then ideally you should come and reduce whatever tax that you are charging others when you are making a sale. What I mean is for every sale you declare output, and for every purchase there is that input. Now, for his question is, what if you are not registered for VAT? Remember, like how I've already explained, you see, for VAT you come and claim it. But if you have not yet registered, that will be like tax on tax. You'll be taxing yourself on another tax. And since now you are not able to claim that VAT that was an additional cost to the business, what you'll do, you'll come and allow yourself, that will be an expense to you. So you'll have the cost of the goods or the services that you are getting as a business, then the VAT element, you can lump them up as one expense, or you can break it down further. So now you have the cost of the product or the service. Then on the side, there is that VAT expense that you are already incurred. You come and claim it. As long as you have not claimed in your VAT, now you see for your position, you are not registered. So if you're not registered and you come and book it as an expense, that will be unallowable because that's an additional expense to the business.
Thank you. Okay. Thank you. Terry, do you have any more questions? I'd like to pose one.
Any more questions? And before we take the next question, please, there's a paper going round. Either you can scan the QR code for feedback, or you can fill in the feedback so that we can improve our sessions as we move to the, to the new year and planning. So just feel free to make suggestions as well so that we can keep improving.
All right.
How many hands were up so that I can, okay.
We have some 2 hands, okay.
Okay, good afternoon and thanks for the insightful presentations. My name is Caroline. I have 2 questions. One is on tax. Okay, for small businesses, knowingly or unknowingly you fail to pay careless some amount of money and then they come for audit. But when you look at what you owe them, vis-a-vis the penalties and the interest, you are like, okay, if I pay this to KRA, generally I will close this business. So is there a way that people in the financial sector are looking, because for me it's the penalty and the interest. Can they have one? Why do they have both? Is there a way that this can, so that if they find that I owe them 1 million, maybe they charge me maybe 200 on top. But now when I look at the penalties and the interest, I mean, they can lead to business which are closing, whether I avoided paying or I didn't know I should pay. You know, people make mistakes along the way. So for me, those penalties are just scare me, if I may put it that way. And the interest, can they have one bureau for businesses that they can have, less penalties or low interest? Yeah. And then my other...
Your second question? Yeah.
Yes. My other one is on wealth creation and preservation of the same and transitioning it to the next generation or to wherever people want it to go. I think in the previous section we had about unclaimed assets authority holding billions of money for people who are alive and dead, for that matter. And then they saw these court cases about succession, even for very prominent people. Then you wonder, where are we really going from? People are lawyers or legal experts, but when they pass on, you see very dramatic things in the media. Succession cases are never ending. People, even those who are choosing the succession, die and they are not benefiting. So is there a way of doing this in a better way so that we have smooth succession? When I pass on, I mean, there's nothing people are taking to court. It's already sorted out. How can we do it better?
Thank you.
Thanks, Caroline. As we move to the other question, there's an online question that is asking about the emerging trends in AI, which is leading to loss of jobs in some sectors. Is there a threat of AI, something that people should be watching out? So that's a question to you as we move on to the next.
Hi, my name is Linda. So my question is to the bankers in the room regarding mortgages. Now, 25 years is quite a long time. Huh? So as I'm taking this mortgage, my hope is that I will have this job that I have and my income is going to keep increasing. So I know you've spoken of an option where if anything happens, I can go back to the bank and be able to maybe come to an agreement and sell the property. But is there an option for restructuring that debt? And what are some of the considerations that are put in place for me now as the borrower? What does the bank look for when it comes to restructuring that mortgage?
Thank you. Take one more? All right.
Good afternoon.
Good afternoon.
Yeah, my name is Anthony, and my question would be with regard to the ongoing issues to do with Forex. Currently, there's a lot of hype about it with the young generation. How true is it that people are earning through Forex? And secondly, what is the tax implication? For example, if I get dividends from outside, I have shares outside of Kenya, what is the tax implication for that? Thank you.
Thank you. All right.
Maybe we can take the final one and then we can go to the summary of the panel.
All right, thank you. Fantastic.
Yeah, it's me.
It is you. Karibu.
I am asking this question on behalf of all parents like me who probably have children who are in their maybe university level, and as parents we kind of give them some small amount of money because they have to move around, they have to buy stuff and all that. So how can you encourage that person who gets some little money here and there, maybe 2,000, 3,000, 5,000 at sometimes? How can you build the culture of them actually saving something small? Because if you recall how you grew up yourselves, if you actually manage to save some little money like 50 bob, 100 bob, 200 shillings from the amounts that you used to get from your uncles, your aunties, your parents, maybe you could have made a very big difference in your life. And I'm thinking it's something we need to introduce to our children. I don't know how, but you guys are the experts, so please educate us.
Fantastic. So I know we have a couple of questions, about 5 of them. I think we could start with that and then transition. All right? Awesome. So I think Fred, yeah, you're popular today, like I said, the elephant in the room.
Yes.
So I think over to you as we keep running it down. Thank you.
All right. So I'll start off with the question on penalties and interest. Remember, just like even a normal individual here, when you give someone maybe a loan or something, then they happen to delay on paying, they might charge you something small, so that now next time when you come and borrow again, remember if I pay it late, I'll be charged something extra. So that's what also happens with tax. Remember, for tax, there are those statutory deadlines or timelines that the government always gives when it comes to filing and paying or making payments for those taxes that are due. For example, if I look at for businesses, remember for income tax, once you have closed down your year, you have up to 6 months to come and file your return and also make the subsequent payment. But now for payments, it will depend, there are certain thresholds. If you are more than 20,000, you can decide to make payments in form of installment taxes. That is, you make prior before you close down your year. Then by the 4th month after closing down your year, if there's any balance, because by then you know the actual performance of your business, you come and pay the final balance of tax. Then by the 6th month, which is normally June, and you know we as Kenyans, we like doing things last minute. So you rush to file the return. So you make sure that one is you follow those timelines. So make sure that you know the timelines. If it's for VAT, you know VAT is by the 20th of the following month that you have to file and pay any resultant VAT for the previous month. If you have employees and you are accounting for pay as you earn, you always make sure that by the 9th of the following month, you file the return and also make the subsequent payments. Same way to the statutory deductions. The statutory deductions are the likes of NSSF, now we have SHIF, we have Affordable Housing Levy, and we also have NITA for the companies that, you see now, for every employee, now companies are also required to pay for NITA, which is basically as what you pay for training for this employee at 50 shillings per employee. So you have to make sure that you align yourself with these statutory deadlines, so that now you make sure that you avoid being penalized and getting interest. And unfortunate thing for interest, it comes at, it's a monthly thing, it accrues every month at 1% every month. For penalties, it's a one-off, so it will depend which kind of tax that you are accounting for. If it's income tax, you'll find that it's 5%, up to 20,000, whichever is higher. For pay as one is 25, the other one is 5 for VAT, or 10,000, whichever is higher. So always make sure that you meet these timelines. And if the amnesty comes back again, and these penalties and interest relates to the period December 2022 going backwards. If those penalties and interest relates to those periods, and you happen to settle the principal tax, KRA will give you full waiver, or they will vacate all the penalties and interests that you have. But if these penalties and interests are for 2023 coming forward, then it will be hard for you. And you know, they already removed the leeway that the taxpayer had for you to seek for waivers of penalties and interest. Maybe let's hope now that we are undergoing submissions and public participation for the new bills. We hope that maybe the Parliament will listen to people, because now people want now to lobby for this amnesty to be pushed forward, so that now it can also cover 2023. If it happens to come up to 2023, then you'll have that opportunity for you now to come and also pay for the principal, whichever is due. Then you'll get a full waiver of the penalties and interest for those years of income.
Thank you.
Yeah.
Thank you. Thank you. Thank you, Fred. So, you wanted to add to that before we go to the next question? Oh, the next question, eh? Thank you. On overseas investments? Fantastic. Very good.
Yeah.
So, Caroline, just to mention that the panelists are also going to stay behind with us just for a bit after we are done with the session, just to ensure that I know a couple of you have been here since morning, so I just want to ensure that we can at least use about 45 seconds or so as we respond to the questions, and then also allow the rest of the parishioners to engage with you just right after this session, because I know there will be contacts and more information that's needed. Thank you. Appreciate it.
Yeah, thanks. So there are some three questions that I would like us to take a stab at. The first one is on how do we encourage our children to save? Which is really critical, because you realize if you start them early, then they develop this as they get into the workplace. Because one of the things that we struggle with is you get yourself at 30, but you often started saving mostly whatever you want, you consume. I'll share what I've done with my kids. I've got a 17-year-old and a 13-year-old. At Standard Chartered Bank, we got a money market fund we call it the Shilingi Fund. And the 17-year-old has reached that stage where over the holidays can work. And also for the allowances which they spend in school. So we had a conversation, you either consume it or I help you to be able to generate our income out of it. And the first step was to have them attend some of the sessions that we are having this conversation so that they can listen for themselves. We open an account, so every money that they get, they put at least 50 to 60% in that account. Now what they make sure they do is to audit that it doesn't consume the money. Now what I see developing with them is that every single money that they get now, they want to invest because they can be able to track the return that is coming out of that. And I hope that will make them develop into really good ladies who can manage their money. The other piece on which you talked about on wealth transfer and legacy planning. That's something that we're struggling with as a country. And more so now that most of the independent generation are transitioning at the moment. We see it every day on the news, on read on the paper, where families are squabbling because of what has been left behind. Most of us don't do as the most basic as writing a will. I know most of us will talk about will, it's like you want me to die. It's just good to document some of the investment that you have. Not all of us are at that stage that you can put up a trust. Putting up a will helps your family, so the loved one, be able to trace what you have. But as basic as having a joint account, in most cases, does help. Just having a joint account, if you're not there, then the spouse can't be able to operate the account. So it's a conversation that all of us need to be open to. Having as basic as a will, having some of those joint investments. There was a question of, do people make money out of Forex? This is my 19th year in banking. 14 of those have been in financial market as a trader. Yes, you can make money, but not at the level all individuals trading directly. You don't have the sophistication to be able to do it or put it off. But what we see also on that one, which you see on the news, a number of them seem to end up dying in 2 to 3 years. Is it because of Forex or something else? I don't think you can make that kind of money just trading. You cannot pull it off to time financial markets and make money at that particular level. I'm not sure.
Thank you. All right.
Can I answer?
Yes.
Okay. I will add something on the how to encourage the children to save. One thing that I know is that school doesn't teach anyone on how to even spend the money, how to save the money. And I'm not sure we learn how to make the money either. We are only told, you study, get a good job, or become an entrepreneur, but nobody tells you what does it take to become that entrepreneur. I think, and I'll combine this with the emerging threats, I think it is time that we as parents realize that some of the traditional courses that we ask our children to go to school to study may become obsolete very soon. The other day I visited a cafe. It's called the Robot Cafe. I know they're just feeling shy of making the robot actually do the serving because they still have some waiters. Maybe because they're in Kenya. Because we are, we're in a country where we are struggling with job opportunities. However, technology would make my business more efficient and I'll make more money without people. So it is time that we as parents have first heal, because I think parents are the problem here. We are coming from a background whereby there is a straight path. You go to university, study, say medicine, you become a doctor. Okay? But this is changing because you will go to university and study medicine and you may not become a doctor. Why? Because you may realize, one, there are robots coming up to do operations. There are better technology that can do a better job than the surgeon. So what will happen to them? I think what we need to teach our children is agility, flexibility, honesty, because those are the skills that are lacking in the marketplace. You're a HR, you know that you're looking for more honest people than more people to do the job. Is it true? Has anyone experienced this? True. What we are having is people coming to the marketplace to make it quick, to make money quickly. Why? Because they see parents who are making money, but we don't even explain to our children how we make money. You go home, they ask for toys, you brought toys. Is it? Did you explain where the toy came from? And they say, monkey see, monkey do. So you imagine, okay, you just grow up and you buy toys. That's it. Where do they come from? I don't know. But when I grow up, I will buy a house. Why? I saw my parents buy a house. Did you explain to them that it was a loan? No. Did you take to them, did they see the process that you went through to get what you got? My son is here. When we were buying our first property, because we actually went when we were negotiating. He was 3 years old or less. He saw us negotiate. You know, he's not getting it, but we are saying we are going to the bank to borrow some money so that we can build the house. And he saw it coming up. I'm not saying I'm a better parent, but I'm saying we as parents, we need to live what we want to see in our children. Because what they see is what they will become. And then also, don't just push them to do courses because somebody did them. Teach them the value of work. Teach them the value of honesty. I know we are not in an honest country, but this has to change. See where we are sinking. You understand? So let's focus on the soft skills, because machines will do the other things. But we still need human beings. I say that for me, I focus on growing businesses, and especially the revenue part of the business before the KRA takes the money. I focus on how do you make, you know, your business make more? How do you solve problems that are bigger so that you can make more? Again, teach them some skills like sales. I teach people how to sell. I teach business people how to sell. Send them to us, you know. Many times you do a lot of free trainings so that they learn some skills. Now, selling skill is not just going to help you sell. It is also going to change your mindset on how do I see opportunities. Because people will, you know, sit here and say, I have this idea. So I see a lot of young people coming with ideas that are, you know, they're solving American problems in Kenya. Why? Because they don't understand how to see opportunities locally. So we teach them start with, who do you want to target? Who is your customer? What challenges are they going through? How can I solve those challenges? That is how you help them start solving problems. We wait for school to teach this, tutagoja kiasi. You know, I know there is CBC. I don't know whether it is addressing that issue, but we may wait for a long time. I don't know whether I'll get another opportunity, but to say
I'll give you another round in a few.
Okay.
I just want to see if just from David Owino, you know, you're in the PE world, in the VC world, and I'm sure in your sector a lot of the AI conversation is happening. You're investing probably in businesses that are technology enabled or technology ready, if not technology driven. So for the question that came in about AI, would you be kind enough to speak to that in terms of the threat of AI and what that means for the future?
Yeah, I think the question was about, and I think she has addressed it well, whether AI is going to take our jobs or not. And I think she's explained it well. It sits on what we think. There's a danger of us thinking of how we were brought up and thinking that this will be relevant to our children going forward. And probably that's not the case, because the world is changing very quickly. And so I have experienced it in such a way that I have seen the young people adapt to technology, actually. So that's the truth. If you think the accountants of tomorrow think like we who are trained accountants back in the day, I think they're thinking very differently. True. Because they will be able to they'll be able to get the machine, make it learn and do the work without they themselves being the ones doing the debiting and crediting and whatever it is. But it is them who are behind these innovations. Cool. And Kenya has been termed to be the place where innovations tend to grow. I think a lot of people, when it comes to fintech or tech or agtech or insurtech, they tend to come to Kenya because they think around East Africa or Kenya, there's early adoption of newer technologies. So I don't think AI is taking away jobs from us. AI is just facilitating us, and the people who are behind the AI are the people who will then thrive. So the minds of the young people are beyond applying to innovation. So that's the new skill. And secondly, to the question of being nasty about education and everything else, please remember there's a difference between education and skills. There's a difference. Schools are good, they give you an education, but they don't necessarily skill you. So when you take a child to school, they'll get an education, because on the base of education, it's easier to skill someone, okay? So education is important. But then beyond education, you need to skill yourself. If you went to school and did BCom, accounting option, you got an education. To become an accountant, you must be a CPA. There you're becoming skilled. Or to become an insurance is a skill you have to do. Now, but beyond that now, we are seeing ideas that are going to, it's not just me doing books of accounts. If everything is technology-based, we should be able to do it. So we are seeing more young people who are looking at, I keep on doing this thing repeatedly and it's boring. Is there any other way of doing it? Innovation comes in the field of accounting, and it develops a program that can do the accounting work, basically the penciling and everything else. So we are not losing jobs, and we should not be afraid. The question is just upskill yourself in whatever field you are in. Always remember that you have to upskill yourself. You can't mark time. If you mark time, then you'll be left behind. Thank you.
Thank you. Thank you, David. I think we had one question that came through online. So you have another one before I ask this one?
There was a question on mortgages here.
No, if we can probably just try to also look at the time.
Okay.
Because I know there are a couple of people who are here and have not had lunch. Maybe we can try
Geoffrey,
to be very brief and very straightforward and give more time to network after the session. Thank you.
Okay. Maybe if I can answer for mortgages. Restructure is allowed. If you've taken some money for a mortgage, and in between you bring lump sum, we can do a restructure. In that, for example, if you are paying 50,000, for example, we can recalculate the amount. And normally when you want to pay lump sum, in KCB, for example, there is no penalty for paying lump sum. The reason as to why maybe some of you may want to take a loan for 25 years is to reduce the pressures for the early years. If you have to look at other things that you need to also to pay. So if that is the case, you can start by a long period, but in between, if you get funds and you want to pay lump sum, you pay, there is no penalty, and then therefore you can be able to ask for a restructure. But if you don't want to ask for a restructure again, you want to continue with the same repayment, it means that you are going to finish your loan much earlier. And in mortgage, when you finish your loan much earlier, then it means you also avoid the interest that go with it. What I have normally seen is that for mortgages, when people look at the long period, sometimes they shy away from mortgages because of they normally see the huge amount that they are going to pay at the end of the day. But if you look at, you can be able to pay in between, because your income is also not going to be static. Somewhere you are going to get more income. Once you get more income, bring lump sum, and then from there you can be able to recalculate the amount if you want. But if you continue with the same amount, then it means you finish your loan much earlier, and therefore you forfeit some of the interest that you'll incur. Thank you.
Thank you. All right.
So when it comes to restructuring, I think at NCB, what we are keen to see is your income source. Today, if you're earning 30,000, you remember during COVID, employees were on half salary and your mortgage repayment still remained the same. So of course, the regulator did then now put pressure on banks to actually provide a moratorium either on principal payment or on interest payment. And for those who are in business, especially schools that were closed down, or even those who are in the hospitality industry, we had to actually put a moratorium on both principal and interest, because most of those institutions were closed around about the same time. But then now coming to your question around if you are to take up a mortgage facility and you're interested in having your facility being restructured, just like I said, first we look at, do you have capacity to still sustain the repayments? Because if your loan balance today is you took a loan of 6.5, you've paid it down to 3 million, you're struggling with that 70,000 payment. So if you come to us and tell us you want to be paying, you're comfortable paying 40,000 every month, there has to be an income source that you can provide the bank with to verify that, yes, there is that bit that that income can actually sustain that repayment. Then the other thing we look at is your commitment as a borrower. And just like Geoffrey said, in some instances you'll be told to put a down payment to show a commitment. You're probably told put a lump sum amount that will reduce the loan to a certain level so that we are able to achieve that 40,000 repayment. And when you're looking at your income, our key, the thing we concentrate on is if you're salaried, for example, if we restructure by extending the loan tenor so that the loan repayment comes down, will it be beyond your repayment, your retirement age, for example? 2, notice when you take a mortgage facility, there's an element of insurance involved. So in extending the tenor, obviously we'll also have to speak to the insurance companies that do underwriting business for us, because if you take a mortgage facility, you're likely to take 2 types of insurance. One, there's insurance you take to cover your life against premature death or permanent disability. Then the second type of insurance you take is one that covers you covers the house against fire or natural disasters. Now the bit that covers premature death and life around premature death is there's a benefit that comes to it that protects your income. And for insurers in the room will tell you, Income Protector is a product that is being offered out there. And with that insurance you're paying per month, that income, should you lose it at any given time in your journey, so let's say you're laid off, the insurance company comes in to pay your mortgage facility for the first 9 months. All right? Provided, of course, with insurance, it comes with riders, they list down for you what will trigger that 9 months coverage.
Thank you. Thank you for that. And I love that you've touched on insurance, because if you could allow me, the question that came through online is actually touching on the last expense and the limitations that come with it. So, of course, I know we're here, we have the ladies here in the space, so kindly to you, Caroline, and I think Jane and Joyce as well, and Eunice as well. If you could, one of you could pick it up, just 45 seconds, we could get some thoughts on that. One of our viewers online would like to know about the last expense and the limitations of copy. The last expense insurance product and the limitations that accompany the same.
Okay, maybe I can, I don't know much about in terms of insurance, the last expense. What I know is that if you take an insurance, you're reducing the burden on the people you leave behind, because there's, for example, like in the self-help, where we have our members, we have a benevolent fund. So when you have the benevolent fund, in the event that you pass on, the self-help immediately issues a check to cover the expenses for all their expenses that may come up in regards to your sending off. But if you take an insurance cover, you also protect your beneficiaries, because the insurance cover covers all the expenses that will be incurred by your beneficiaries while giving you a send-off. Also, you will be able to leave something for them so that they can be able to carry on. I think that's what I understand in terms of our status.
Thank you. Eunice, maybe you can add to that before we close that section.
Yeah, they are asking about the limitations of the last expense, and I want to assume they are asking about what they call the small prints. So there are so many last expense in the market, and what you will find is currently majority of the insurance companies, I have a company called Bismart. Bismart is an online insurance agency, and so we work with multiple insurance companies. So what happens with the last expense is that you can take a cover that covers your immediate family, that is you, your spouse, your children, and your parents and parents-in-law. Now, the limitation to this is if your parents are, some companies will cover up to the age of 85 years old, other companies will say the limit is 80 years, and I'm yet to find one that will cover 90 years. Is there one? Yeah, yes. So you will find some that are 90 years old. So that is one limitation, that if your parents or parents-in-law are beyond the age that the insurance can cover. However, you can still cover the others who are within that age limit. So there is the age, minimum age at entry, and there is it minimum? Maximum age at entry. So most of the company will cap it at 85, and a few at 90. And there is there. Now, if you take it, and then they also limit the age at which you can keep renewing. So, for example, maybe the entry was 85, and then some companies will up it after 90. That means after 90, if your parents have lived after 90, you're so blessed, so you'll be keeping money to be able to send them off, and therefore the insurance will not take care of that. So what you need to do is, it's very important that you compare those, small planes. The other thing is, some will have waiting periods. When you are taking the cover, they will say, okay, some companies will give a waiting period of 3 months, others is a month, others is 6 months. You need to check what is the waiting period. So those are the two main issues you need to check when you're looking at a last expense. Important is to compare the waiting period and the maximum age at entry and the maximum age at the end of the cover.
Thank you so much. So allow me at this point to go into last remarks, quick 45 seconds across the board. I'd like to start off with Angela. Just our last remarks as we close the session so that we can be able to move into the next step in terms of networking and stuff, so that at least I know we have parishioners who'd love to meet with you away from the panel, because we can't answer all questions. Thank you. Over to you, Angela.
Thank you. Now, I'll pitch very fast for the questions that I took outside there. Now, most of you are asking Caritas Microfinance Bank, how does it relate to the groups, the Caritas Nairobi groups? The bank is separate, the groups are separate, but this is how we marry. The Caritas Microfinance Bank has a product that is called Caritas Pamoja. It means that if you are a member of self-help group, you are able to deposit into your account directly from the bank counter. Also, from the bank, you can track your balance. It also means that when you come over the counter, your deposit is slashed by half. Your over-the-counter fee is waived by half. It means if the over-the-counter fee is 120, you will withdraw 60 bob.
Thank you. My apologies, I'll have to interrupt you just briefly. I'd like us to make a quick round. So, based on what you've said, I think you've got lots of visitors on the outside. So I'll allow you to just cut it at that point, so that I can make a quick round of last remarks. But thank you for giving us that insight. Over to you, Philip, and then we can close across as we come all the way down. Thank you. Your 45 seconds.
Thank you, Ray. To one more, and the fear you laid about saving for children, I wanted to extend that we also have a product for parents that can allow you to own a property with anybody who is about, your son or your daughter is about 21 years, so it's a parent-child mortgage where you make repayments on a monthly basis. So much so that if they are now into gainful employment or they are doing their business, you can then allow them to be repaying the facility themselves. Then later on they can transfer that property to their name instead of you buying and handing it over to them and covering their repayments. Beyond that, we have different other products that NCCA can offer you. If you feel that if you're not able to manage construction yourself. We have a product called NCABA Easy Build that allows you to buy off-the-shelf designs, and we provide you with all the professionals and supervise the project for you. So you only need to wait for 9 months, and we'll be able to hand you over the keys for that matter.
Thank you, Philip. Much appreciated. Thank you so much. Over to you, Geoffrey, as we close.
Okay, for me, we started with talking about debt. What I can encourage the audience is that don't hear debt. It's on how you want to manage, plan, and take. So in KCB, for example, we have various types of loans. You can come for business loans, you can come for personal loans. But one that I really want to emphasize on is the KMRC one, the affordable housing. You have the option. You have the option of paying rent, or you add something small and you own a property. So it's something that I really want to encourage you. 9.5 is not something that you can be able to get in this market right now. So it's a very big benefit to everyone. And if you have the opportunity to have some income, whether it's business income or personal income, don't miss this opportunity for the affordable houses.
Thank you, Geoffrey. Thank you.
All right.
Mine I'll say is that for those who are in business, remember sales is the lifeblood of every business. Without sales, you have no business. And I want to encourage you to get a copy of this. This is, most people who have read this, they say it's your sales Bible. And it's not only your sales Bible, but anything that you feel like insurance people do not tell you about, it is here. It's based on my personal journey as an insurance agent, growing to be country sales manager and starting an innovative business model within insurance. And for those who are in business, the hits and misses is a very good copy for you so that you understand you're not the only one going through the tough challenges, the difficult times, you can recover from them. So let's keep talking, let's keep encouraging one another. I'm giving an offer. This copy goes for 1,500. But for all those who are here, you'll get it at 1,200. This other one is for 1,000. I'll give it at 800. Only today.
Thank you, Eunice. Fantastic. So there are offers all over, guys. Take advantage of them. Thank you. Over to you, James.
Yeah. Thanks so much. So for those in the room and those who are watching online, I'll just share with you 3 things that we share with our clients at Standard Chartered Bank that has enabled them to cross over 180 billion shillings worth of their money for us to manage for them under Standard. 3 things. The first thing that I did talk about is what's the purpose for the investment? Why are you making the investment? Very critical. The very first decision that you need to make is be clear on your purpose. The second bit is the principles that you follow to carry out the investment. Are you disciplined? Are you trying to time the market? Are you looking at the risks that you are taking? And are you protecting the investment that you put? And the most important piece is when it comes to the investment preference, make sure you work with someone that helps you take out the emotions out of investment. When it comes to investment, it can be emotional. Make sure you use a professional to guide you, work with you, so that the decisions that you make, even if the market goes a different way, you stay true to the journey and the goal that you're seeking to achieve. Thank you.
Thank you, James. Thank you, much appreciated. Over to you, Fred.
Okay, for me, what I'll say is tax is a never-ending conversation, and tax is very dynamic. It keeps on changing year in, year out. So as long as you are doing business or you are earning any income, remember KRA will consider you to be knowing your declarations that you are making. So one, always be work on the declarations that make sure you make the right declarations. Make sure you understand the statutory timelines because they work with the statutory timelines. And for you also make sure that you keep yourself updated with these new bills and laws that come in so that now you comply with the new requirements and make sure you don't miss out or being penalized. and also to understand any other further actions that needs to be taken. Let's say when you are issued with the assessment or objection decision, what will be your next steps? So always feel free to contact us. We are at SKM Africa. Thank you.
Sana. Thank you.
I've given him some of my time. I have nothing to say. I have nothing to sell.
Thank you, David.
But mine is just to tell you, well, Christ told us, do not be afraid. If you're in business, think about having advisors with you. I think they've spoken about personal advisors, financial advisors, but just think about having advisors with you. Life is becoming complex. Taxes will pay whether we like it or not. So think about getting advisors and talk to people to help you think through your business ideas. Thank you.
Thank you. Appreciate it.
Thank you.
Welcome, Jane. Over to you, Jane. I think he's donated about 20 seconds.
Yeah, I'll donate some too. So my expertise is in supporting small businesses to grow. And what I'd say is have a goal, stay focused. And we see businesses, coming in for 3 years and then you give up your passion or what you were doing, you wanted to do, and then starting another business and another one. So be there for the long haul, embrace technology, and you'll see success.
Thank you so much. Appreciate it. Caroline?
Thank you very much. Of course, I'm the last one, but last is best. Okay, thank you. You have had a lot of fear for debt, I know. Everyone here is afraid even to borrow. So I'm going to give you an option. If you can save first. For example, if you can join a circle, a self-help, and save. I'm not saying that don't go and take debt, but it's easier to take debt from what you have. And for Consolata Self-Help Group, you can save, and once you save, the biggest benefit there is, first you can take 4 times your savings as a loan, and your interest is only 1%, which means if you're going to pay your loan within 1 year, you'll only have paid 6% on the loan. So debt is good if it's planned, which goes back to whoever does not plan is planning to fail. Thank you.
Thank you so much. So ladies and gentlemen, do at this point allow us to give a round of applause to our amazing panelists. I know it's been a lot of information, but definitely, as Terry mentioned, they'll be right outside here for showcasing and networking. So please visit the stands. They're still here till about 5 p.m., I think. They'll still be here until about 5 p.m. and our panelists, a majority of them, I believe, will still be with us. So thank you so much, ladies and gentlemen. Over to you, Terry.
Thank you so much, Raymond. I think that was insightful. I wish we had more time to, to just listen through, hear about their products, but I think with time, if you want a one-on-one, it's better so that you can understand some of these products without being rushed through. Key takeaways: value and purpose drive wealth, create value through purposeful saving, strategic borrowing for growth, investment over consumption, plan for success. We've had a lot of planning here, we need to plan. Understanding taxes and investment, I think that cannot be overemphasized. Tax implications, again, with accurate declarations, and of course, understanding your business to know where you're going to, put in your tax. I will also mention that we have Britam, NCBA, ICEA, HF, Caritas Microfinance Bank, Optivent, Stanchart, all having tents outside, so please take time to spend it with the teams there. Ask all the questions. I'm sure some of you have questions that you didn't ask. Please feel free to do that. And with that, I would like to thank you so much for your time. It's not easy to sit here from lunchtime up to now. There's also a cafeteria. Please just, you can get some food from there. I think the prices are usually very favorable so that you don't go hungry throughout the day. So thank you so much. And I think there's still some tea. Is there some tea and snacks or not? Is there some tea still? Okay, we can check. Outside there was a table that had been set on your left for some tea and snacks. It's just something to keep your stomach at least okay for now. So you can check. If it's not there, maybe it was already exhausted. So thank you so much and have a good evening, and I'll hand it back to the owners of the program, Richard.
Good, thank you very much. Thank you, everyone. We had a number of companies that came in and wanted an opportunity to just tell us who they are. And maybe we'll start with Optiven. Someone from Optiven can just maybe say a word or two. Karibu Jackie.
Wow, amazing. Good afternoon, everybody. My name is Jackie from Optiven. And my takeouts today, one, budgeting and expense, debt management, savings and investment. And I think that's where we come in fully. We are a real estate company and have been in the industry for the last 25 years. We are actually celebrating our anniversary this month for 25 years. Our CEO, Dr. Washeri, a philanthropist, a mentor, an author. And mostly why we do what we do is to ensure that we impact the society as we settle Kenyans, both locally in Kenya and those in the diaspora. I know most of you have already visited our stand. You had a lot of questions, but I believe the panel that was here has already advised us that with investment, you just choose to invest wisely, take the risk to investment and watch your investment grow. So we welcome you. We have properties all over the country in different counties. We welcome you to come and ask us every question you have and we will serve you. And being November, we have amazing offers for you. And thank you so much for actually being here. Asanteni sana.
Yeah, for those who are around, I just wanted to say you can visit our stand to really have more in-depth conversation around wealth management. As we did say, when it comes to wealth, it's personalized. What you need or what you set as your goal is different from the next person. So do go out to the tent, have a conversation with our team, or those who are online, you can be able to reach to us through any of our content sector, visit any of the branch, so that we can sit down with you, take you through to understand how can we be able to help you start your investment journey, manage the wealth that you have, and be able to do the next stage, which is more or less, how do we pass the wealth that you've made to the next generation? Thanks and welcome to our stand. Thank you.
Thank you, Rero. I think we have Britam. 45 seconds.
Okay, good afternoon, investors. Okay, Britam, we do specialized in protecting our, the wealth of our clients. We also have, we were talking so much about mortgages and we do mortgage protection. And as you do your mortgage protection, it's not just a protection that will not earn you, will still earn you. We were talking about, there was a question of a last expense. Our last expense cover is always very transparent. There's no fine print. We explain everything. Above all, we actually go up to 100 years, depending. It will only be a little more money, but we have such covers, not limited to 80, 70 years. And so, security is key in life. Life is very insecure everywhere we go. Please talk to any of the Britam financial advisors and you'll have a good, peaceful life. Thank you so much.
Thank you, Britam. I think we have ICA, if I'm not wrong. Is ICA team here? Oh, there's CPF. Okay. Yeah, she's showing me her logo. Come, quickly. 45 seconds.
Good afternoon, everybody. My name is Maureen Kivuti. I work for CPF Group, Foundation and Pensions Club. So one thing that is very unique about my organization is that we deal with the elderly. Our main aim is to give the elderly a dignified life. So basically we have a pensions club. What happens in the pensions club is we normally have monthly meetings, just like Rotary or any other club. We normally have monthly meetings to engage on recreational activities, insightful educational workshops, comprehensive health and wellness programs, in-depth financial planning sessions, opportunities for meaningful volunteerism, and also access to exclusive deals and discounts when you have our pensions card. So basically what you do, or if you want to be a member of the pensions club, there's an annual fee. We have our flyers. So there's an annual fee which begins even like with the caps, the small ones, from 1,000 bob, and the highest is like 10,000 annually per year. Sorry, just kidogo.
I'm going to have to cut you short,
okay,
CPF,
okay, ma'am.
and send people to your booth.
Certainly, I agree. Thank you so much.
Okay. NCBA, you have anything more? Everybody has something to say.
Just to welcome you to attend, and to the bank that says go for it. And beyond that, if you're looking for a property, we have our property center that is located in our branch at Mamangina branch. That's just next to International House.
Thank you, thank you. So in the interest of really taking care of those who haven't had anything to eat today, I really want to bring this to a close. But guess what? You can all visit the tents out here. All these vendors are represented, and you can actually have a conversation. You can ask your questions, you can get support. So are we in agreement? Can I do that? Please, kindly? Okay, good. You didn't say nothing, but yeah, I thank myself. Yes, so I'll ask us to please be upstanding, just give thanks to God, because you've been very kind to us. Today's been the solemnity of Christ the King, and we want to call upon that King, to be the King of our lives. So in the name of the Son, the Son, Amen. Amen. Our Father who is in heaven, hallowed be thy name. Thy kingdom come, thy will be done on earth as it is in heaven. This day our daily bread, and forgive us our trespasses, as we forgive those who trespass against us. Lead us not to temptation, but deliver us from evil. Hail Mary, full of grace, the Lord is with us. Blessed are you among women, and blessed is the Jesus. Holy Mary, Mother of God, pray for us now and the hour of our death. Dear Heavenly Father, we are so grateful for this day. Lord, when we walked into this day, we ask for your favor, we ask for your blessing. And indeed we have seen it. Many questions have been responded to. Doubts have been opportunities have been provided for us to seek guidance, move forward in being good keepers of the wealth that you have given us. And so we are grateful, Lord. And even as we leave, as we depart and go to our homes, we ask that you continue to grant us that good decisions around the wealth that you have provided us. We thank you for all the speakers, all the panelists, all the vendors who have been here to support this community. Father, we speak a word of blessing upon them, Lord. Even as we continue to serve, God, they will see you in every activity that they do. For this we pray, believing and trusting in your holy name. In the name of the Father, and of the Holy Spirit. Amen. May you all be blessed. Have a beautiful evening.